Bitcoin really hit $125,000 by the end of 2025? That's the question on many investors' minds as we look at the current landscape. In this video, we'll break down the bullish scenarios that could drive Bitcoin to new heights, the risks that might hold it back, and how likely this price target seems based on today's analysis. Whether you're a seasoned crypto investor or just curious about the future of digital assets, understanding both the upside and the pitfalls is crucial. Let's start by exploring why some experts believe $125K is within reach. One of the main reasons for optimism comes from analysts and prediction markets. Hedge fund ZX Squared Capital, for example, projects that Bitcoin could reach $125,000 in 2025. This isn't just wishful thinking. Prediction markets like Kalshi currently assign about a 35% probability to this outcome. IBIT's head of derivatives has also commented that $125K by mid-2025 is possible, especially if institutional demand continues to grow. These perspectives suggest that the $125K target is not just a wild guess, but a scenario supported by data and market sentiment. Prediction markets are a fascinating way to gauge collective sentiment. For Bitcoin, platforms like Kalshi show that there's still a roughly 1 in 3 chance of hitting $125,000 by the end of 2025. Other analysts, such as those cited by Motley Fool, estimate a 33% chance of Bitcoin reaching $140,000 by early 2026. This means that $125K is well within what many consider a reasonable bullish upside. These odds reflect not just hope, but the aggregation of bets from thousands of market participants. Major driver behind bullish Bitcoin forecasts is institutional adoption. If more capital flows into spot Bitcoin ETFs and other investment vehicles, demand could surge. Institutions bring significant buying power and tend to hold assets for longer periods, which can stabilize and lift prices. As more companies and funds allocate a portion of their portfolios to Bitcoin, the scarcity effect becomes even more pronounced. This institutional interest is a key reason why many analysts remain optimistic about Bitcoin's future. Regulation plays a huge role in Bitcoin's adoption. Pro-crypto regulatory environments, especially in key markets like the US and Europe, could make Bitcoin more accessible to both institutions and retail investors. Clearer rules can reduce uncertainty and encourage more capital to flow into the market. On the flip side, negative regulatory surprises or stricter oversight could dampen the rally. For now, the trend in some regions is toward more acceptance, which supports the bullish case. One of Bitcoin's most attractive features is its fixed supply. With a maximum cap of 21 million coins, Bitcoin is inherently scarce. If demand rises, especially from large investors, this scarcity can drive prices much higher. Unlike fiat currencies, which can be printed at will, Bitcoin's supply is locked in by code. This unique property is often cited as a reason why Bitcoin could outperform traditional assets in the long run, especially during periods of high demand. Coins halving events are another important factor. The last halving occurred in 2024, reducing the rate at which new coins are created. This means that over time, fewer new Bitcoins enter circulation. If demand remains steady or increases, the supply constraint can put upward pressure on prices. Academic research supports the idea that halvings have a positive effect on price, making them a key part of the bullish narrative for Bitcoin. Combination of reduced new supply and rising demand creates a classic supply-demand imbalance. If both institutional and retail demand continue to grow, the limited supply of new Bitcoins could become even more significant. This dynamic is at the heart of many bullish forecasts, as it suggests that even modest increases in demand could have an outsized impact on price. Some experts are even more optimistic than the mainstream consensus. Tom Lee, a well-known Bitcoin bull, has floated targets as high as $150,000 to $250,000 by the end of 2025 in certain scenarios. Standard Chartered, a major global bank, has models that see Bitcoin reaching over $200,000 if institutional inflows remain strong. These aggressive forecasts highlight the potential upside if everything goes right for Bitcoin. Of course, it's not all smooth sailing. Bitcoin is famous for its volatility, with steep drawdowns possible even during bull markets. Large price swings can shake out weak hands and create uncertainty, making it risky to go all in on any single price target. Investors need to be prepared for ups and downs, even if the long-term trend is positive. Broader economic environment also matters. If central banks tighten monetary policy or if a recession hits, capital could flow out of risk assets like Bitcoin. Geopolitical shocks can also create uncertainty and reduce appetite for speculative investments. While Bitcoin is sometimes seen as a hedge, it's still affected by global macro trends. Regulation is a double-edged sword for Bitcoin. While pro-crypto policies can help, any negative regulatory surprise or stricter oversight could quickly dampen the rally. Governments around the world are still figuring out how to approach digital assets, so the regulatory landscape remains uncertain. Investors should keep an eye on policy developments in major markets. Any bullish forecasts rely on predictive models like stock-to-flow or power law price projections. While these models are useful for framing expectations, they're based on assumptions and historical patterns that may not hold in the future. Prediction markets reflect sentiment and betting activity, not guaranteed outcomes. It's important to treat these models as guides, not certainties. Prediction markets are platforms where participants can bet on future outcomes, such as Bitcoin's price at a certain date. The odds reflect the collective wisdom and sentiment of thousands of traders, but they're not guarantees. These markets can be useful for gauging probability, but they're still subject to rapid shifts in sentiment and external shocks. Even though Bitcoin's supply is fixed, the actual impact of supply shocks can vary. If miners decide to sell more of their holdings or if new supply dynamics emerge, the expected supply-demand imbalance might not play out as forecasted. While unlikely, these factors could limit the upside for Bitcoin, especially if demand doesn't keep pace. Bitcoin isn't the only game in town. Other cryptocurrencies and even non-crypto assets could compete for investor capital. If Bitcoin fails to maintain its narrative as a store of value or digital gold, demand could stall. Staying ahead of the competition is crucial for Bitcoin's long-term success. Widespread adoption is essential for Bitcoin's continued growth. If retail and institutional interest wanes or if new technologies outpace Bitcoin, its dominance could be challenged. The crypto landscape is constantly evolving, so ongoing adoption is never guaranteed. How likely is $125,000 by the end of 2025? Many credible analysts and models support this range as a plausible bullish scenario. The base case assumes continued institutional inflows, supportive macro and regulatory conditions, and sustained retail adoption. While not guaranteed, this outcome is well within the realm of possibility based on current data. Given the current state of prediction markets and expert forecasts, the probability of Bitcoin reaching $125,000 by the end of 2025 is moderate to high. It's not a certainty, but it's a scenario that's taken seriously by many in the industry. Investors should weigh the odds and consider both the potential rewards and the risks involved. For Bitcoin to hit $125,000, several things likely need to happen. First, institutional inflows must continue or accelerate. Second, macroeconomic and regulatory conditions should remain favorable. Third, retail adoption needs to stay strong or even increase. If these elements align, the path to $125K becomes much clearer. Institutional investors have the power to move markets. Their participation in Bitcoin through ETFs and other vehicles can drive significant price appreciation. As more institutions allocate to Bitcoin, the asset's legitimacy and stability increase, attracting even more capital. This virtuous cycle is a key part of the bullish thesis. Supportive macroeconomic and regulatory environments are essential for Bitcoin's growth. Low interest rates, accommodative monetary policy, and pro-crypto regulations can all help drive demand. Conversely, tightening policy or negative regulatory surprises could derail the rally. Investors should monitor these factors closely. Retail investors remain a vital part of the Bitcoin ecosystem. Their enthusiasm and willingness to buy and hold can drive prices higher, especially during bull markets. Platforms that make it easier for everyday people to buy Bitcoin are helping to expand the market and support higher price targets. Even if you believe in the bullish case for Bitcoin, managing risk is essential. Volatility can lead to large drawdowns, so strategies like scaled entries or hedging can help protect your portfolio. Diversification and disciplined position sizing are key to surviving the ups and downs of crypto investing. To navigate Bitcoin's volatility, many investors use strategies like dollar-cost averaging, stop-loss orders, or options hedging. These approaches can help smooth out returns and reduce the impact of sudden price swings. Staying disciplined and sticking to your plan is crucial in such a volatile market. Putting all your eggs in one basket is rarely a good idea, especially in crypto. Diversifying across different assets can help reduce risk and improve your chances of long-term success. Even if you're bullish on Bitcoin, consider balancing your portfolio with other investments. Hedging is another way to manage risk in volatile markets. This can involve using derivatives like futures or options, or simply scaling into positions over time. The goal is to protect your capital while still participating in potential upside. Successful crypto investors often take a long-term view. Short-term volatility can be nerve-wracking, but focusing on the bigger picture helps you stay grounded. If you believe in Bitcoin's fundamentals, patience and discipline are your best allies. Market sentiment can change quickly in crypto. News events, regulatory updates, or macroeconomic shifts can all impact prices. Staying informed and being ready to adapt your strategy is important for navigating the fast-moving world of Bitcoin. Many traders use technical analysis to identify trends and potential entry or exit points. While not foolproof, chart patterns and indicators can provide valuable insights into market dynamics. Combining technical and fundamental analysis can strengthen your investment decisions. Fundamental analysis looks at the underlying factors driving Bitcoin's value, such as adoption rates, network activity, and macroeconomic trends. Understanding these fundamentals can help you make more informed investment decisions and avoid getting caught up in hype. Emotions can be a major obstacle in crypto investing. Fear and greed often drive poor decisions, especially during periods of high volatility. Developing emotional discipline and sticking to your plan can help you avoid costly mistakes. Bitcoin's history is full of dramatic booms and busts. Studying past cycles can provide valuable lessons for the future. While history doesn't repeat exactly, it often rhymes, so understanding previous market dynamics can help you prepare for what's ahead. The crypto world moves fast and staying informed is essential. Follow reliable news sources, track regulatory developments, and keep an eye on market trends. The more you know, the better equipped you'll be to make smart decisions. Crypto communities can be a great source of information and support. Engaging with other investors, sharing ideas, and learning from experienced traders can help you stay ahead of the curve. Just remember to do your own research and verify information before acting on it. The technology behind Bitcoin and other cryptocurrencies is constantly evolving. Upgrades to the Bitcoin network, new Layer 2 solutions, and innovations in security can all impact adoption and price. Staying updated on technological developments is important for any serious investor. Security is a top priority in crypto. Protecting your assets with strong passwords, hardware wallets, and two-factor authentication can prevent costly losses. As the industry matures, security standards are improving, but personal vigilance remains essential. Regulations are evolving rapidly in the crypto space. Keeping track of new laws and compliance requirements can help you avoid legal pitfalls and make better investment decisions. Proactive compliance is becoming more important as governments pay closer attention to digital assets. Bitcoin is a global asset influenced by developments in every region. Adoption trends in Asia, regulatory changes in Europe, and institutional moves in the US all play a role in shaping the market. Keeping a global perspective helps you spot opportunities and risks early. While Bitcoin is the most well-known cryptocurrency, there are many alternative assets to consider. Ethereum, stablecoins, and even traditional investments can play a role in a balanced portfolio. Understanding the strengths and weaknesses of each asset helps you make better choices. Flexibility is crucial in fast-moving markets like crypto. Be ready to adjust your strategy as new information emerges. The ability to pivot and adapt can make the difference between success and failure in volatile environments. Despite short-term volatility, the long-term trend for Bitcoin has been upward. Adoption is growing, technology is improving, and institutional interest is rising. Focusing on these big-picture trends can help you stay confident during market turbulence. Sum up, Bitcoin reaching $125,000 by the end of 2025 is a plausible scenario, supported by analysts, prediction markets, and strong fundamentals. However, significant risks remain, including volatility, macroeconomic shifts, and regulatory uncertainty. Managing risk and staying informed are essential for navigating this exciting but unpredictable market. If you're a long-term crypto investor, consider $125,000 as a valid target in a bullish scenario, but don't bet everything on it. Diversify, manage your risk, and keep learning. The crypto journey is full of surprises, and staying prepared is the best way to succeed. The future of Bitcoin remains uncertain, but the potential for significant gains is real. By understanding the drivers, risks, and strategies discussed in this video, you'll be better equipped to make informed decisions. Stay curious, stay cautious, and keep an eye on the evolving crypto landscape.